Hi, everybody. We are here with another session with Sina Moini and myself. After a long time that we haven't recorded anything, welcome back, Sina.
Thank you very much, Zara. Thank you so much for hosting me again. I'm so thrilled coming back again.
That's awesome. So when we were talking, we decided to have a session about cash flow and why it's really important for every entrepreneur and startup to have a cash flow. And then we want to talk about how to prepare one. And then after that, we wanted to kind of talk about investors and if you are presenting or if you are pitching, what is really important to investors in terms of cash flow. Did I cover everything, Sina?
Yeah, for sure, definitely. We're gonna have a very much exciting, discussion over this because this has been lately pivots of concerns of not only entrepreneurs, but also like people like I and you, and then some sort of confusion I experience when I talk with people. They just speak about what problem they are facing with, and why not? Let's get over it. Yeah.
Yeah, for sure. So I'm gonna talk to you about one of the experiences I had this week, and maybe we can start with that. So one of my prospects, I had a call with her, and she was pretty much in stress, talking about she wanted to really go to the bank and get a loan because she was in kind of like a surprise situation that she forgot about a lot of expenses that were coming her way. The landlord increased the rent and she completely forgot about it. And then the question I asked her, I said, do you have a cash flow forecast? And then kind of she paused and she was like, no. So I guess like that speaks for itself, right? Maybe we can talk about like what the cash flow statement is and how it really helps business owner to run their business more efficiently.
Definitely. That's a quite nice experience. Well, if you ask me, I also experience, facing with the challenges that other people also have. The point is that they first think about, especially those who have some sort of accounting or finance background. So they may mistake between what cash flow statement is and what cash flow forecast is. As we know that, okay, the cash flow statements is something that have been popular recently during the last few decades, and accountants are preparing. It just expresses the relationship between balance sheet and P&L. Well, the basis is on cash, not the actual basis of which the financial presentation of financial statements are being prepared with. So the point is that specifically cash flow forecast, it's something, somehow familiar with that in terms of like the cash basis transactions. However, it is not a financial statement. It is just something that is used like for an internal use, like an internal report used by managers, internal used by individuals, like they want to do the budgeting, they want to do the simple forecasting. They want to know what are their income streams, what are their expenses are, and it's going to be in a very simple format. However, somehow complicated basis because going back to the actual basis, we know that okay, how the recognition and measurement is done, but however in this cash flow forecast, it's something that you have to consider just the cash basis, like totally different with the actual one, like how much cash you're receiving from different income sources, your type of expenses, you're sorting them out, organizing, and then so on and so forth. This is what the cash flow forecast is all about, and then the difference with the cash flow statement as well. Yeah.
Sina, before we really dive into a lot of accounting terminologies like accruals and cash basis, I was thinking maybe we can just let them know the cash flow is a flow of cash, as the name stands for itself. So, as a business owner, if you really want to focus on the cash flow, I always tell my clients think about it as a river, right? So the water that flows into the river are all your incoming cash, and then down the stream the water that goes out of that river and goes to different multiple streams of other type of waters that becomes your cash outgoing. So and it's all about the money that comes in and the money that goes out, and it's cash, as Sina was saying, like it's not accrual. And what accrual means is if you happen to have an expense that happened or is going to happen, and you are not going to pay it right away, you are going to pay it in the future, you are going to accrue cost for it. But because you haven't paid for it in cash, you are not going to put that in your cash flow. So whatever comes to the cash flow statement has to have a component of cash, as the name it stands again. So if we want to go back to the definition, so the cash incoming is all the money that you collected. If you sold something, if you provided services, and the clients or the customers paid you, so that's going to be your cash incoming. And now you have all these little expenses here and there. So if you have rent, pay payroll, pay for marketing, a lot of expenses that every business has. So if you pay them in cash, they're going to be your outgoing that you need to put in the cash flow statement. So I thought maybe we just give them a quick definition before we dive into a lot of accounting terminology, and then we can talk about those pieces later on. So Sina, maybe we now that we know what the cash flow is, the outgoing and incoming, how can we actually prepare a cash flow in a very simple format? Because our audience, they are all like running their own businesses, they're startups, entrepreneurs, and they really want to know how can they do it? Can they do it themselves? I want to say yes, they can, if it's very simple and it's not really complicated. But then maybe we can tell them how they can actually prepare one.
Yeah, well, lately the fintech advanced improvements, there are like many personal budgeting platforms are there. Even there are some softwares that people can use it online. Well, I offer always my clients, and I actually myself have something in a spreadsheet. I always rely on Excel. Very fantastic, application with varieties of features, great charting, scenario analysis, formula. You can just put like whatever you want, and you can actually extend it to very advanced financial model. So not only applicable for personal use, like for individual life, but also for business life, like entrepreneurs, small and mid-sized businesses can also use that. So sticking to that Excel file, well, also there are some templates, ready for download and free, or probably can be purchased, on different websites. Well, I'm not sticking to any specific templates. Well, the templates should be somehow adaptable to people's like entrepreneurs, lifestyles, like to your business model. So it normally includes, on the top, well, the income streams. Well, we normally start from the left side and then coming down, starting from expenses. Well, what I do and what I offer people to do is just taking a very careful look at their expenses and then sort them out. Like for individual people, like buying from Costco or Walmart, credit cards, I don't know, subscriptions, Netflix, whatever that is, can be included like one by one. It depends on how detailed everyone wants to go down. And probably for businesses are also different. It depends on like managers or owners, how they want to get the results. Like some people put like entertainment expenses and then that's it for them. Okay, that's fine. So it seems that it's like there are some breaking down of each categories, definitely. But yeah, this is it, because well, something that I stick to the Excel, because it gives you, first of all, it's user friendly, very simple to learn as well, and you have an ability to export it any format, and then or probably download and extract from any application, again, to Excel files for further detail analysis. You can do some charts, definitely, pie charts, bar charts, those charts giving you fantastic insights of what's going on with your budgets. You can do with a formula, definitely, and then well, enhance it and then extend your formula for your scenario analysis or for your forecasting. So this is what I've been loyal to Excel. So
Perfect. So just
wow.
to recap, yeah, just to recap. So you are suggesting the people, our audience, to use Excel because that's very simple and it's simple to learn and simple to basically execute. And then the level of detail that they want to go through, if they want to like put everything into one line, or so if they want to put everything into one line or really go down to the detail of break down all those expenses, that's up to them. And then starting from the left, we are going to have our incoming cash. That's going to be like payments from customers or clients. That's going to come in as a positive number, and then all those expenses going in as negative. And whatever is left out of that calculation that is incoming minus all those outgoing is what the cash is left in your pocket or in your bank, hopefully.
Yeah, definitely, definitely. You know, one thing I wanted to question you as well, since you are so engaged with the small clients in terms of providing them with the CFO virtual services, is that people keep asking that in terms of their various income stream, specifically when it comes to business. So they are facing and they are trading with a lot of other businesses like well, suppliers in terms of cash outflows, in terms of clients and customers, in terms of cash inflows. How, because there's some sort of confusion that cash basis, like we imagine like each month, like a timeline or week, I don't know, depends on the whole thing. So how do they avoid confusion, how to sort their income stream from different clients in terms of cash flow, especially when they are working on a credit system, not cash system?
Yeah, so that's a great question, Sina. So I guess like you mentioned something really nice at when we wanted to start talking about the cash flow, and you said you really need to look at your business model, right? So every business, when you're making your cash flow, definitely it needs to really tie into your business model. It depends on if you're a service provider, if you have a storefront, if you sell online. A lot of like different business model can have different approaches to the cash flow. So for example, if you sell your products on e-commerce, so a lot of money that the customer pays you on Shopify or a lot of other platforms, it comes to your bank account right away. So there is no credit system. So that money can go directly into your cash flow statement. But then if like you run a business, like if you provide services and you give your customers invoices, and for example, they have 30 days to pay, and then you'd never know if they're going to pay at the beginning of that 30 days or they're going to pay you at the end of that 30 days. So there are some uncertainty when it comes to every business model. But then what I suggest to the clients is when we are putting your cash flow together, we look at it as like every month as a time frame. So we start like producing that template that you mentioned on a 12-month rolling forecast, and every month is going to have its own column starting from incoming all the way to those outgoing lines that we just talked about. And then we really look at the business model and see, okay, if the money is going to come right away or if the money is going to come like the next month. So what we do is like we look at all the invoices that the business has produced and look at the term on those invoices. And if it's like 30 days, so it's going to fall into that month. If it's 60 days, because a lot of customers tend to really stretch the payments as much as they can. So if there's like a 60 days term, we normally put it in the next month. So to just really eliminate all those uncertainties around the money that is coming to the business. So, and then if I want to go back to that rolling forecast idea, is you have like, let's say this is January and you want to really forecast your entire year. So you have that template that we talked about. And then for every month, you are going to have a column. So January all the way to December. So you're going to have 12 columns. And every month, when you're at the end of the month, you open up your cash flow template and you say, okay, how did I do this month? Should I touch any of the numbers that I already forecasted or not? Because, for example, you may forecast that your payroll cost is going to be like $5,000 every month. But then all of a sudden you got a big order, you signed a big deal, and you really need to bring more employees to be able to service your deal or the agreement that you just signed. And then you're like, okay, now I need to change my payroll expenses for the coming month. So it's like a little bit of a, if you go back to the videos that we produced last year, when we talked about the business plan, we said you don't write the business plan and like kind of like frame it on the wall. It's kind of like the cash flow, right? So you don't put it there for the entire year and you never touch it. You constantly need to go back, evaluate your numbers, and really update it as your business changes as well.
Mm-hmm. That's a great idea. That implies pretty much the rolling forecast. But in a simple term, well, how often should we do this? Like, I don't know, for like a small scale business, how often?
So depends. You said a small scale. I probably suggest maybe every 2 weeks, because if you are like only one person running the business, you have a lot going on, but at the same time, you really want to be able to manage your business as well. So look at your bank account. So open up your bank account and look at how much money you have left. Look at your cash flow forecast on a every 2 weeks kind of like time frame. If you are a very busy business that like have a lot of cash incoming and outgoing on a daily basis, so I suggest maybe every couple of days here and there, or even weekly if daily is too much. So it depends on how big volume that business is dealing with. And based on that, like I suggest to go back and look at the cash flow. So I have a couple of clients that they are in SaaS business. So they just like sell software, right? So that's not a really high volume business. So you can just do it on a monthly basis and it's not going to hurt your business as far as you feel like you are in control.
Yeah, totally. That makes
so yeah, that's great. So the next question was that, well, in terms of use, well, I personally said that I stick to Excel files. I got my own reason, but what do you think, since you're involved with like more clients, if a business of a smaller scale, should they go and buy the licenses of those personal budgeting or the platforms or everything, or what do you suggest them?
Yeah, so today's entrepreneurs are really tech savvy. They really want to use the new technologies that are out there and really optimize their approach towards the cash flow or anything that happens in their business. If they can afford it and if they're open to pay for those licenses, for sure, I really highly encourage them. But then they need to understand that there is a learning curve involved and also there is a cost involved. So you need to pay for the licenses and really be ready to learn as well as you go, because we are all familiar with Excel and how it works, but getting a new software has its own learning curve. The other thing is like they can go back to that QuickBooks, as I mentioned, like the new QuickBooks, the QuickBooks Online, the cloud version has a lot of capabilities right now. And then really, if you pair that with a good Excel, not Excel that is only this cell plus that cell, like it's a little more complex models that we create in the Excel sheets. If you really pair that with a good Excel model, I think the small businesses should be good for an extended period of time.
Perfect. Yeah, exactly. And recently, while I was talking with some of the individual people, they also had the same problem like business owners. The point is that, okay, when it comes to the categorizations, okay, we know that we recognize the income and the revenue and from sales, product, service, dividend investments, and our expenses, well, rent, entertainment, subscriptions, and so on and so on. So how they can, because it's not a matter of profit or of loss. It's not, again, accounting. It's a matter of surplus and deficit, right?
Yes.
So everybody likes surplus, why not? So they can, save money, they can go for RSPs, TFSA, whatever. So the point is that how they can make a balance, how they can plan for the surpluses. Are there really I don't know, the strategies out there, or yeah?
Yeah, so definitely that's what we do, that forecast, rolling forecast to begin with, because when you do a rolling forecast, you will see where your business is at right now and where it's headed in the future. And then when we are not happy with the outcome, for example, when we did the cash flow forecast and realized, for example, we are in January right now, but in July, we are going to have a big deficit. And then from July onwards, our deficit is just getting bigger and bigger until the end of the year. So then now we have a picture of where our business is headed to. And then now we can make a plan and say, okay, first of all, we need to focus on the things that are we can control. And that is our expenses. Expenses, we can definitely control a big portion of it. So we review our expenses on a month by month basis and say, okay, so if we are paying, let's say $10,000 on marketing, is that really giving us the customers that we need? Like, what is the ROI? What is the return on an investment on that marketing? And then just analyze your expenses on a line by line basis, understand if they're reasonable, if you can really squeeze them and make them smaller, really get a better understanding of what you can control in the first place. Then the next is, okay, now I really analyze what I could control. Let's go to the uncontrollable elements. And one of the big ones is really sales. Because sales, I know you can control it, but sometimes whatever you do, the customer is just not coming to buy from you. So you really need to go back and say, okay, what are the other sales strategies or marketing strategies that I can really implement to bring more sales? And more sales means more cash in a lot of instances if people are paying you. Sometimes a lot of businesses make this mistake as well, and I have had a couple of my clients. So they think bigger sales means bigger cash, but if they are not paying you right away, you are just like making your accounts receivable bigger and bigger. And then you have now another burden on yourself, really going after people, collecting money, calling them and say, hey, I paid you, where is my money? So never think more sales is more money. So really be strategic about that. So yeah, if I want to recap, first of all, do that forecast, see where you have surpluses, when you have those negative months. And by surplus, if people are asking, what do you mean by that? So surplus means you have more cash, right? Your more incoming is bigger than outgoing. And the deficit means whatever you can brought into the business in terms of the customer payments were not enough for your expenses. And that's why you have a deficit. The goal is you have surplus every month, or you really break even, right? So whatever comes in your business, you expense it. But then if you have deficit month over month and you can't really sustain the business, so that's where you are in trouble.
Definitely, exactly. And well, in terms of, because it just came to my mind in terms of who pays you, and I mean, which client pays you well, like regularly, like you immediately bill them. They are so like stick to their promise, and those who don't, like, they're lazy in terms of payment. It reminds me of we can later actually discuss this matter of how to find the qualified, clients, especially for advisors, consultants, freelancers, and this is how probably next time we have to stick with that. So some ask me, should we go, I mean, in terms of expenses, should we like a little bit scrutinized in terms of, okay, classifying fixed expenses and variable expenses in our cash flow as well, or just the normal categories of expenses? So what do you think?
That's a matter of choice. What do you think? Because I feel like you can have those categories in your income statement and really have an understanding of what your fixed costs are and what are your variable costs are. And for our audience, if no one knows what we are talking about, like fixed costs are the costs that you you have no control over, right? So they are there. No matter how much you sell, no matter how you are doing, you definitely need to pay the rent. You can't call the landlord and say, you know what, I can't pay this. But then the variable costs are the one that you can control, and that's why we call them variable costs. So a lot of income statements are broken that way between the fixed costs and variable costs. But when it comes to your cash flow, I think it's a matter of choice if you want to keep that presentation or if you just want to have it line by line. What do you think, Sina?
I would say that we can avoid complexity, and since, well, our audiences are probably not with a specific finance background, so we can stick with this like a combinations of both, because well, naturally the cash flow is it should be a very simple cash flow of my inflows and outflows from both sides. So yeah, we can stick with this generality, like just my expenses and that's it. And then you don't need to actually even go for any specific categorization. However, the detail into the extent that a user wants to, or an operator wants to, bring it up with, is definitely depending on their either business model or their personal lifestyles. That's perfect. And a very controversial issues in terms of cash flow is that how we can, if we definitely have more convenient control over our expenses, we are just like, I can have a control of my expenses. Like I can stop my subscriptions. I can probably go not to dine out. I don't know, whatever. But if I don't have that much control over my income, how can I optimize the whole cash flow things in order to stick with that? Yes, speaking of goals, definitely on monthly basis or weekly basis, I must have a surplus in order for, I don't know, investment, saving, whatever purpose. But how we can optimize this whole thing to create more surpluses, especially focusing on the income side of the cash flow.
Yeah, I guess like you mentioned something that was really interesting. So you said when we are talking about the sales strategies and really going after the clients, maybe one approach is really thinking about who we are selling to first. So we divide our customers or clients between like different categories. So the ones that they are like really upfront, they pay us right away, they are like easy clients, and then maybe starting from there and then categorizing them to like the more difficult clients. So the ones that they always like fight over the invoices, they don't pay us on time, and then really strategize it that way. And if we are putting some marketing efforts into bringing more customers in, maybe we first target the better, I should say, better customers, the more easier ones to deal with. It like this, the optimizing the cash flow, I think in terms of the income state, the income portion of it, it really ties into your sales strategy and marketing strategy and how you look at your sales, right? So how did you build those funnels to begin with? And then who do you need to go after and bring more sales in, right? So one of my clients, actually, she's struggling to bring more money into her business. And what I keep telling her is really try to think from your customer's point of view. So for example, if it's summer, no one wants, and it's really hot out there, no one wants to drink coffee except myself, which I had one yesterday. But then maybe you can say, come in for a cold drink, like invite the customers into your business and put yourself into their brain and see how they think. And then with that, now how can your message changes to really invite them into your business, being it a store, being it an online shop, being whatever your business model and your product is. Definitely think about from your customer point of view. I think we have an extensive workshop that we talked about the pain and gain and all those pieces when it comes to the customer. But if you just really want to simplify it, think about what your customer wants right now. And then if you can offer it, they definitely buy from you.
Yeah, exactly. That's truly right. Well, a friend of mine also recently asked me that, okay, like his close friends now became a client of him. And then he said that because he's a close friend of mine, I have a difficulty actually asking him, okay, please pay for the services that I'm just giving to you. And says that the guy is paying me a lot, like huge portions of my income, like depending on him. I mean, his friends now is being a client. So, and I said that, okay, well, it totally depends on you, because if I were you, I would definitely fire the back client, because and second is that, why are you, substantially, depending on like all the income streams on him? Like, why don't you look for some other? He says that lack of capacity, and I said, okay, why don't you like look for probably making a balance of the services or hours, or probably hire some people helping you to do this, because sometimes we get into some contract and then because of ambitious or whatever it is called, we believe that we can do that alone. Like we have the 100% capacity, we need no help, and we can carry on whatever project with whatever scope and whatever timing, because of we're going to be the only partners of our business, and like, yay, the whole profit is mine. So I would say for sure you gotta first of all ask him very honestly, like the business, the honesty, integrity, and then if you're not paying him, I'm really afraid that I cannot go on further and invoice that guy immediately. Like, don't even wait for like tomorrow it comes, or even okay, like today is Friday, and then I will bill the guy on Monday morning and Tuesday morning when I get in the office. No, just right away. Even when you still not finished yet, but you're fine, that your client is also fine. Try to, let's say, bill them at least.
Yeah.
Because every biller invoices, who knows when it comes to the the clients, maybe their accounting process, accounting departments, it takes some time as well. So we don't like to wait for the money to come. We just want an immediate money right after the service.
Yeah, and then the client understands you are committed to your business as well, right? Because it's the effort that you put into that service. And if you had a better client or a more committed customer that pays you, so you kind of get rewarded for all the efforts that you put out, regardless of who the client is. The other thing that I want to touch base before we finish our conversation today is, so a couple of my clients, before they become my clients, they always kind of like suspect that this cash flow is going to work, because COVID showed us that there are a lot of uncertainty in business, right? How can I really predict what's going to happen next month? How can I predict what's going to happen in the next 6 months? And then because of those uncertainty and not knowing, they just decide not to do it. And that's really scary and very dangerous, because if you don't do the cash flow, if you don't do your budgeting, regardless of all the uncertainty that is out there in the market, you still don't know where you're going. So I guess like having something is better than nothing. What do you think, Sina?
For sure, that was quite a hell of an experience after COVID, and well, still people are just being gradually recovered, businesses as well. So I would say, well, this is what I adopt to myself. It's the science of probability, which is very simple. When I have, for example, a potential like clients or business opportunity, I would simply try to put them on a piece of paper to see that, okay, which client is more feasible, which project is more feasible in terms of income stream, because I don't want to waste the time and the energy and the resources on something that has no end, no results. So I would say, okay, I would go with more feasible, more probable one. Like I probably look at the past trends and then the histories of each client. And if those guys are my repeated clients, definitely I know their treatment, I know their behavior, I know their systems. And also for new clients, the new clients are coming probably from the new referral. The new clients are coming from new advertisement. You definitely have to have a little bit of study of what is the backgrounds of the new clients. If they have adequate reputation in the markets, if they are fine in terms of on-time payments. Well, they don't have any barrier. They don't do a lot of asking for a lot of overview and revision and blah blah in their work. So hence I select, I try to tighten this actually funnel for myself, because inevitably we are living in 100% uncertain world and environment. And we are not sure that, okay, I can get expected results from a specific client or even from the suppliers. So that is how I go with a little bit feasibility study using probabilities to see that which one has a more probable, not even possible or remove results,
Yeah, and that's a great point actually for a lot of businesses. If I keep saying, if you are providing services or if you're selling products, because these the concepts that we are talking about and realities that we are talking about, because we are bringing you stories from our clients and the live real case studies. So it's really important to analyze what you want to do first, right? So because I had all these like conversations that I have been privy to, that people say, okay, I'm like doing my Instagram advertising, I'm putting on Facebook, I'm on my LinkedIn, I'm on Google, like a lot of advertising without even like really doing that thought process that Sina just mentioned, really those probability studies and really analyzing, okay, if I do this, it's going to result in that. Like just a quick study of, okay, all these efforts that you're putting into it, what's going to bring you, and then go out and throw your money out at all these like giant social media marketing companies that they're just benefiting from us not really thinking about or planning properly, right? And then hoping for a customer that comes along. That was great point, Sina.
Yeah, great point. And last but not least, I believe, well, speaking of income, and now when we arrive at the expenses, some say that, okay, we don't have or how to have a better control over our expenses, especially those who are having a little bit complicated inventory management, those with varieties of suppliers, those are in production, not in service industries. And I would say that, okay, you guys have to really once in a while overview your list of suppliers, because suppliers also, like the sellers, they would like to sell with a very favorite terms, but it seems that sometime and after a while, well, they are well positioned and the relationship is fine between our business and theirs, there has been a slowness, somehow a barrier, somehow an obstacles in the whole process. And I would recommend that, okay, why don't you overview and then change your suppliers? Because especially the bargaining power of like both sides are fine. So you can shift from, if the costs are not too high, switching costs, you can then just shift to another suppliers to optimize, because probably a major part of your expenses might be inventory, the maintenance, the holding, the ordering costs, and so outsourcing or finding another supplier are best strategies in this way. Like you don't want to hire people because taxes, CPPs and stuff like that. So why don't you go and freelancers and outsourcing? Definitely the market out there is much more competitive, and you are deliver the projects with more high quality. Also changing suppliers as well will help. And the point is that sometimes, last but not least, all expenses, like regardless of what category they are, sometimes, for example, I myself, some say that, okay, the Netflix things, I'm so addicted to that. For one time I said, why I'm paying this much? Like it's a very small amount of my budget anyway, but it is the money. But sometimes we believe that we are paying something that we really don't care because we are so sink into the biases. Like we see other people using it, so we believe that, oh, yeah, we have to using it, we have to buy it, we have to go for shopping, we have to consume that. And this is something that I also believe we have to revise our brain to see that we really had to cut the expenses that doesn't generate revenue. It reminds me of that very effective cash flow, that you stick with the expenses that, for example, self-educations or investing to yourself is something that, no doubt about it, closed eyes, you have to go for that. Thousands of dollars educating yourself. But something that, like a lot of subscriptions, a lot of dining out, a lot of entertainment are something that definitely are should be subject to revision, I guess. So what do you think after all?
Yeah, absolutely. So I guess when I talked about the marketing expenses and the cash flow, I kind of touched based on the return on investment. So when you are reviewing those expenses and analyzing, to your Sina's point, really understand what those expenses bring you. So are they just there to be there, or is there any purpose behind those expenditure? And if there is no purpose, first of all, think about, can you minimize them or like eliminate them in their entirety? So because then that will improve your cash flow. These were all the great conversations, Sina. So basically we wanted to kind of like give our listeners a taste of what the cash flow is, how they can prepare it in its simplest format, and then give them some live examples of like, okay, how can you optimize your income and then optimize your expenses a little bit better. And this was a great session. Thank you so much, Sina.
Thank you so much. Thank you so much. It was really a long time, but we have to actually go on with this on a regular basis. Thank you so much for having me. Really best wishes with this very long holiday and weekend.
Yeah, I can't wait to record another one with you. Hopefully soon this time.
Yeah, for sure. Thank you so much.
Have a great day.
You too. Bye-bye.